He is the chairman of O'Shares ETF and the star of the hit series Shark Tank. Kevin O'Leary is my guest today. Kevin, good to see you. Welcome to my new show.
Great to be back.
Yes, it's been a long time. And Kevin, there is so much uncertainty. And I had to call you in today to help make sense of what's going on. As we're speaking today, we still have an undecided election. We have 100,000 new COVID cases, Europe going into lockdown. Yet we have a US equity market rallying with tech stocks up 10% in the last 2 days. What is happening?
I think in terms of, the tone of the market, let's just deal with the election risk and the volatility that it brought on. We'll go back to the morning after the second debate. I'm going to walk you through the way I see it from an equities point of view. And the first debate was just chaos. There was no policy talked about there. But the second debate was interesting in the sense that because it was moderated differently with the mute button and all the rest of the structure they implemented, you got more policy. And in the second hour of the debate, you heard Biden talk about phasing out the entire hydrocarbon infrastructure towards a new Green Deal and the new regulatory environment on state and federal land regarding fracking. Very definitive policy. And that created a tremendous amount of volatility in the days afterwards because you're talking about 8 million jobs in America, massive tax hikes, and the risk of the definitive blue wave. At that time, it was considered that that's what would happen and that they would win both the Senate and the House, and they would control Congress with a White House that was ready to do some dramatic changes to sectoral weightings. And the market didn't like that, obviously, from a tax perspective, and also from just what it was going to do to, after all this time and trouble to create energy independence in America, that was going to be put at risk. Now, the market was very concerned about that, and it also took down tech stocks because they are going to be highly scrutinized in a more regulatory environment should a blue wave hit. And all of those things happened simultaneously, and volatility came back. Well, it turned out that was a really good buying opportunity because the election came, and it's clear there is no blue wave. There's not even a blue beach. There is all we have now, under the most likely scenario, is what I call Biden light. He'll get the mandate, it looks like right now. Probability is he'll probably get the White House. Not yet, though, and we have to wait and see how Pennsylvania rolls out, and everybody's looking at that. But the blue wave and the pressure from his socialist left wing is not going to be part of his mandate. He'll be able to do basically nothing without the support of the Senate. And they've lost 5 seats in the House, which really goes to tell you something's disconnected within that party and the people of America. So they've got to do some soul searching, probably puts in question Nancy Pelosi as a leader. Maybe it's time for her to retire. And certainly Biden, and this is what's interesting in terms of policy and the equity market, he's going to have to get to midterms 24 months from now and try and get that unemployment rate down to, let's say, below 5%. So there's no tax hike, there's no Green Deal, there's no whacking the energy space. None of that's going to happen. And on top of that, he's of an age where he probably doesn't get a second term. So you've got a really interesting pause in the action, so to speak. And probably, if it works out the way the market's looking at it, no mandate or ability to make major changes. And the market likes that a lot. And you're seeing it happen right now.
Yeah. And I guess if we know 2 things for certain, okay, so America's definitely divided more so than we ever thought, probably. And 2, like you've been saying a long time, let's just forget about the pollsters, throw them out the window. Let's talk about that. I mean,
the polling industry is useless. I used to buy data, particularly for polls like Brexit, et cetera. I don't spend any money on anymore. They have somehow don't have the technology to poll people anymore, or maybe they're not even polling people that are voting, or who knows what's going on, who cares? They're basically snake oil salesmen. They have no idea what they're doing, but it is entertaining and it's fun. In this election, it probably, if Biden doesn't win, it would have hurt him because he relied on the warm and cuddly feeling of being up 10% in an imaginary poll and didn't go out of the basement for 2 weeks when he should have probably been, maybe polling a little harder in some states that he didn't get. So it's sort of, going forward, people will remember pollsters as I don't know what to call them, entertainers, comedians. I mean, but they have nothing to do with anything to do with in politics determining outcome. Zero. So I totally ignore that data.
We see the lockdown happening again in Europe. What about the likelihood of it happening again here, Kevin, or are you waiting to see first the victor from the election?
I'm going to assume the election will be resolved by probably Monday, maybe sooner. It depends what happens in Pennsylvania. But the timetable for investors, I think that they should get their head around the pragmatic one. I'm here in Boston. We have a semi-lockdown. We have a curfew at 10 o'clock. That means two things. For industries, there's no second shift because your employees have to be home by 10. So, I'm involved in a commercial kitchen where we make baked goods. We run 2 shifts. We always have, and now we can't. So that's the problem. Restaurants, any investments I've got in that space, the last seating is at 8 o'clock and you have to order right then. The employees have to be let out at 9:15. They have to close up the restaurant and they're already at 50% diminished capacity. So there's lots of quasi lockdowns going on like this in other cities in America. So the way I'm getting my head around it is I'm looking for therapeutics that are widely distributed in the second quarter of 2021, not a vaccine, therapeutics, so that if you contract COVID, you may be able to ride it out at home like a bad flu with therapeutics. I'm thinking vaccines start to get distributed in maybe the back end of the third or the fourth quarter of next year. That means we've got another year of this. So probably, in terms of investing, my biggest holdings now are in healthcare, which is 22% of my portfolio, the Pfizers, the Mercks, the J&Js. Those are massive holdings for me. I like the fact that they're involved in the vaccine creation. I like the fact politicians aren't bashing them as much. I like the cash flow. I like the massive dividend yields. And they're really good to own during volatility, which I think is going to come when we get focused back on COVID counts every day. Right now, the election is trumping that, so to speak, no pun intended. But we will be back at it next week talking about COVID cases. And the other area that I'm very heavy and long in is clearly in information services and the technologies that are digitizing the economy. I had a hand in making the index OGIG, which includes over 70 companies, global companies that are involved in digital technology, which is being used by the entire economy. Zoom, DocuSign, JD.com, Wix.com, Facebook, Google, all of those companies form an index of companies that are empowering America to digitize and sell direct. I would note that even in Nike's numbers this quarter, they did a remarkable job in pivoting it out of retail, and they've got 33% of their global sales direct to customer at 100% gross margin. So this is getting really interesting.
Interesting. That's how Kevin O'Leary's investing. I know you don't love the crypto space. Bitcoin over 15,000 right now. Gold and silver also on fire here. We're seeing a lot of hedge fund managers take big bets on gold. Have you changed your position in the yellow metal?
No, I've got a 5% weighting in the yellow metal. In fact, I've had to sell some recently. I pay for storage for bullion, and I have for my allocation and weighting, I use GLD. It's not the cheapest ETF, but It's very, very liquid. And so, I'm selling down to 5. Bitcoin's interesting too, but frankly, I'm a gold guy. And I was very disappointed in March when it was clear that Bitcoin did not protect you against a declining stock market. In fact, it seems very highly correlated to equity. So I don't know why everybody thinks it's so amazing. I'd rather own something that's been working for 2,000 years, gold. And if,
Well, I guess the counter argument is because I could get richer faster on Bitcoin. Look how long it took gold to get to $2,000 here.
Yeah, it's true. But I also would argue to you that the volatility inherent in Bitcoin is extreme. It can be at 15,000 and back at 4,000 in like an hour. It's too volatile for providing stability in a portfolio. And I'm not against it. I mean, I've been pitched Bitcoin now for years. It's, to take it up to a 2 or 3% weighting in the portfolio. As a fiduciary, I can't do it. Many institutions do not consider it an investable asset. The regulator doesn't like it. I mean, there's a million reasons why it's fun for me, it's fun to play with. And I have a wallet of it, that just to me, it's like going to Las Vegas. It's fun, but it's not an institutional product. And maybe it will be one day, and I'll be a participant, but I just can't get excited about it when every institution and regulator is just barking at me like a dog every time I bring it up.
Kevin, I want to get your thoughts on the US dollar. A lot of people were discounting it, then it roared back. We're up and down with it. People are saying it's no longer going to be the reserve currency of the world. Where do you see the fate of the dollar?
I've been listening to people tell me it's not the reserve currency of the world for 25 years. So you tell me what is. Would that be the yuan, or would that be the Swiss franc? Maybe, but that doesn't have enough liquidity in my view. For me, the two reserve currencies are the US dollar and the Swiss franc, and those are the ones that I use for currency. Obviously, having some investments in Canada, I do keep some Canadian cash, but that has not been a good place to put money to work for a whole bunch of reasons. So it's a
or perhaps some sort of digital currency. Look at central banks that Euro's talking of some sort of e-euro.
I'm very interested if a bank endorses a digital currency and the Fed endorses it and the SEC endorses it and the regulator endorses it. I'm on board. I'm totally there. But the last thing I want at this stage of all my investments in financial services companies is some regulator contacting me about some digital thing that is not regular. I don't need that headache.
I think I know, I hear what you're saying. And I think also what's interesting is when we were so inundated with all this information between the pandemic and the US election, a lot of times news slips through the cracks. And one important headline was the IMF managing director coming out saying, we might see some sort of return to a Bretton Woods system.
Yeah, that's true. I mean, I actually think that Bitcoin should be an institutional product. And I would like to see that happen. But for those of us that live and breathe the compliance and regulatory environment, and I do that in so many companies that I now invest in fintech. I mean, I've got a wide portfolio of companies that are highly, highly regulated. And so I just, for example, I'll give you one that came out of the Jobs Act. It took 3 years for the first platforms of equity crowdfunding to happen. And so, the one that I invested in was called Start Engine. I'm also a paid spokesperson for them. I should disclose that. But we're raising hundreds of millions of dollars in the crowd, and we're highly regulated. Every deal is the equivalent of writing a prospectus. Do you think I want to hear from a regulator about Bitcoin?
Fair enough. Fair enough. And we have the CEO of Start Engine coming on next week.
Great guy. Howard Marks. You're going to love that guy, co-founder of Activision. I'm totally behind him.
Well, I feel speaking with you, Kevin, I feel a greater sense of peace now. So thank you. Thank you for coming on. I appreciate your thoughts.
You got it. Thank you. Take care.
Thank you, Kevin. And thank you for watching Stansberry Research. We'll have much more for you. Keep following us on all our social media channels. We're on LinkedIn, Instagram, Twitter, Facebook. We are all there. Thanks for watching. I'm Daniela Cambone.